Now, if you want to talk about the most powerful brands in the world, well, it doesn't get much stronger than this. And arguably the best investor of all time, Warren Buffett, has this as his, by far the largest position in his portfolio. The past 10 or 15 years, Apple has changed the world. Whenever they release a new product, starting from the iPhone, it's just a license to print money. The AirPods went from just like a random idea to then billions of dollars of additional free cash flow. They created it out of nothing. And we've all seen the lines on the streets waiting for the new updates and the new products to come out. So the big question is, should we invest in Apple stock today? Have we missed the boat? Can they be just as creative as they've been over the past 10, 15 years for the next 10, 15 years? I was actually once an Apple investor, so let's see if I should get back in and at what price. All right, so I'm going to do the most difficult thing first, and I'm going to try to figure out the growth rates of the future for Apple. Now, what I can do is I can go back and look at the past. I can think about what they're going to come out with in the future, and I can try to figure out by the annual reports and the commentary around the company what I think the future may look like. Again, a lot of nuance here. So let's see. So what I'm going to do first is I'm going to look at the last 5 years of revenue growth rates. And I've got 229 to 394, 229 to 394. I'm just getting this data from TIKR Terminal, a link in the description below for that. And okay, we're telling the revenue growth rate around about 11%. If I look at the gross profit, we've gone from 88 to 170 in that period, 88 to 170. Let's have a look at what those growth rates look like. Okay, we're looking at about 14%. The cash flow statement, I want to look at cash from operations. So we've gone from 64 to 122. So from 64 to 122 over the past 5 years. And we're now getting a bit of a range here. We've looked at 11, 14, 13. We're looking a little bit above 10%. So can Apple continue this growth rate moving forward? I don't know, of course. We can be a little bit conservative and maybe say something like 10%, because being such a massive company, even if they do launch new products over a 5-year period, some years they will, some years they won't. You know, they're probably getting not far away from market saturation already. So if they can grow at, say, 10% for the next 10 years per annum, I think that's actually pretty strong. So I would argue that that's a pretty good growth rate moving forward. I could adjust these slightly higher and maybe say I'm a bit more bullish on Apple over the next 5 years and then unsure after that. So I could say 12%. Let's do that and see how we feel going forward from there. So the discount rate I've just put as 10% because we're trying to figure out fair value. It's a little bit above the S&P 500 and it's what institutional investors would be chasing to get 10%. The multiple I could sell it for such a great company, Apple, with their moat and their brand power and all these things. Let's say that they'll keep a multiple of around 20 in the future, even though those growth rates are not as impressive. A multiple should be get 24, but let's just say it's going to be 20. Now, the operating cash flow minus maintenance capex, what I did was I found the operating cash flow number here in the cash flow statement here on this line. And then what I did was I just Googled Apple maintenance capex. You go to Guru Focus. I didn't want to sign up for Guru Focus because it's expensive and I'm tight. But I can search for, it tells me here that the past 5 years maintenance capex on average is about 8 billion. So I've used that number, subtracted it from the cash from operations, and we get about 110 billion roughly or so at the moment of free cash flow. Then I put the shares outstanding number in, the net debt position here I've just found from the balance sheet. What I did was I just went to the balance sheet and I just went down to where it says net debt here. And it tells me right now there's 57 billion of negative net debt, which means it's positive, which means they've got more cash than debt. And it tells me that a fair value is around about $210 a share for Apple using this method. Now, obviously, as you can see, the calculations require quite a bit of nuance and research, and I'm going to have to be updating this regularly with new information that comes out. I'm going to keep track of all of this in a weekly report called Yes Stocks, No Stocks. There's a link in the description for that. It's no BS, no fluff. I just go straight into the valuations in that weekly report. Now, you'll get this each week for free, and I highly recommend you joining, as a lot of the heavy lifting and the analysis and that sort of adjustments to those growth rates is going to be done for you. Now I like to do a 5-year valuation model and compare that to the DCF. And what I've done here is I've just put in the current revenue number, that 5-year revenue growth rate that we're expecting, the free cash flow margin, which sits at about 26% at the moment, but it's not. I wanted to use operating cash flow minus maintenance capex, so I put this up to 28%. A future price to free cash flow number of about 20, because that's very strong free cash flow and it's very strong business will allow that. The dilution rate, they've been buying back shares quite aggressively over the past 5-10 years now. Sometimes it was up to 4 or 5%, but the last few years has been about 3%. I would expect that to continue, and if it doesn't, I'll have to make adjustments. But let's keep it running at the 3% buyback rate. So that's why it's negative 3%. Current shares outstanding, current market cap of 2.7 trillion, which is very high. All right, it tells me that the target share price in 5 years' time is around 288, and that's a 5-year compounding growth rate of 11% based on the current market cap. So depends when you're watching this, of course, depending what the share price is doing. At the moment, the share price for me is $175. So to get 10%, we just make this a fraction higher, which should be about $180 a share. So I have a DCF. My DCF method gave me about 210. My 5-year method gave me about 180, somewhere in the middle there, like 190, 200, somewhere like that. Let's call it 200. So I would say fair value for Apple stock is around $200 a share. Now, at what market cap would we want to get a far better return? So I would say if we cut this number nearly in half, say 150. Okay, so you can be a little bit higher than that. Maybe that's probably pretty close. 1.6 trillion, so that would be about a 30% fall in the share price from where it is today at 175. So we're looking at sort of maybe like $120 a share, something like that. In my DCF method, if I want to change my growth rate to, I want to get, say, 22% return on my money, my price that I want to buy this at is around about $90. Let's call it $100 a share. So somewhere around that 100, maybe 120, 90, anywhere in that range, we're starting to get really interesting as a buy price. But I would say that at the moment, being at $175 a share is not far off the fair value of the company. And you probably expect, say, 10, 11, 12% return on your money from the current price. So as things change, I'm going to need to make adjustments. And all the new reports that come out, the new products that get released, maybe they hit something huge and they double the size of their business, things can change. So I do want to keep on top of this, and how I'm going to keep track of this is in the weekly report called Yes Stocks, No Stocks, link in the description like I've mentioned already, and that's where I'm going to keep this updated. So I hope you've enjoyed this video. I hope you got some value out of it, and I will see you in the next one.